Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello and welcome to the July 10th edition of Basis Loaded with Joe Schmit. I am Joe Schmit. This episode, as always, is produced by Paige Driscoll with help from the EverAg Insights team. We are back from a 1-week Independence Day holiday. We returned with all 10 fingers. What better way to celebrate than with the latest from the NDPSR report? Let's start with butter. This butter number coming in at 313.65 represents a plus 5 to the CME 1-week average of 308.40. So big basis. Plus 5 is well above our expected 2-cent positive basis. Manufacturer was able to call a high price. However, at that elevated level, the manufacturer not even able to move 2 million pounds. So well short of our expected 3.5 million, and disappointing volume here on the NDPSR. Volume at the CME last week was only 3 loads, so that could be part of the reason, but the main culprit appears to be this elevated price level. End users seem to be sticking their nose up a little bit at these lofty levels, and I think you'll notice that this is a common theme throughout this week's report. Speaking of low volume, let's move on to cheese, starting with the block, 193.41. Again, that is a really nice price. That is a plus 6.5 to the CME 1-week average of 186.81. So plus 6.5, well above our expected 3 to 5 cent positive basis for the blocks. However, at that elevated level, only able to move 9.5 million pounds. So well short of the 12 million pound expected volume. Part of the reason, again, light volume at the CME last week, only 5 loads trading hands. That's not the entire reason that we fell short. It seems like end users are unhappy with block prices north of 190 and are taking the bare minimum on forward contracts, with the total volume coming in at 9.5 million pounds. Actually, this marks the 10th week in a row that the NDPSR volume has failed to reach the 12 million pound threshold. So once prices at the CME in the block moved over that 160 level, volume has fallen off. Now, again, 10 weeks ago, we were back in late April when we were able to achieve expected volume on the NDPSR. So this has been quite a run for the blocks on low volume. Barrel, the story is similar, 198.79. That also represents a plus 6.5 to the CME 2-week average of 192.22.5. So again, 11.3 million pounds, well below our expected 13.5 million. I think it should be pointed out that the barrel at 198.79 is 6 cents over the block price. So a lot of talk about how the barrel is a big drag on total cheese. Not the case this week, with the barrel calling a 6-cent premium. And if you want to say that that's half the weight, pulling the cheese price up more than 3 cents. The total cheese weighted average up more than 3 cents. So the barrel really the leader here on price. However, similar to blocks, if you go back 12 weeks, you have to go back for the barrel volume to achieve the 13.5 million pound level. So even a longer streak, the barrel was the first cheese product to move higher in April. We've had a 12-week run ever since prices at the CME surpassed the 150 level of lower than expected volume. So if you fall 2 million pounds short on barrel cheese sales for 12 weeks, that really starts to add up in total poundage. And as I said, I think the manufacturer was focused on other varieties of cheese. That only goes, as far as you have demand for other varieties of cheese. If the manufacturers ever switch back to commodity blocks and barrels, we are likely to see that product show up at the CME. In whey, 43.40. That represents a minus 4 to the CME 1-week average of 47.75. Minus 4, of course, negative basis. And we were expecting this as prices at the CME ascended rapidly. Whey is an extremely slow-moving product and has been slow to keep up with the gains that we saw at the CME. What's interesting here is if you go back to the benchmark price of June 22nd of 43.56, manufacturers had to discount under prior week's NDPSR to move weight, and still, like every other product on this week's report, unable to achieve the expected 4.5 million pounds. So volume and whey has even fallen below expected levels, like all the other products. 3.7 million pounds, well below our 4.5 million expected volume. 2 loads at the CME doesn't help to pad that volume level. And the real shock here is that this week's dry whey number is a discount to the June 22nd number of 43.56. So the manufacturer had to discount in order to move weight and was unable to even achieve that. Certainly a disappointment for whey on this week's report. And then lastly, Nonfat, 120.07. That is essentially, call it a flat basis to the CME 1 week average of 119.88. We traded 6 loads on the CME last week. 6 loads. Whew, look at this Nonfat volume, 9.4 million pounds. So at this 120 level, there is essentially zero interest. Well, not zero. 9.5 million pounds worth of interest only for Nonfat this week. We'll see what they have in store for us in weeks to come. So this is the first week of the 4-week July pricing cycle. We still have a little bit of math left in July, but if you carry current CME prices out through the remainder of the July pricing cycle, getting 1985 for class 3 and 2130 for class 4, if you take current CME equivalents and run those through the 5-week August pricing cycle, getting an August class 3 of 2025, August class 4 of 2120, so that class 3, class 4 inversion narrows to 95 cents if all things remain the same at the CME. We'll see what they have in store for us in the weeks to come. Until then, on behalf of Paige and the EverAg Insights team, thanks so much. See you next week. Bye.